Welcome back, traders. Good morning to you, and I'm so pleased to welcome you to yet another promising session on the Mastery Live that we take on a daily basis. Well, as usual, we are going to be diving into an exciting and as well insightful analysis of the financial instruments on our watch list for this week. And since the beginning of the week, we have been reviewing and monitoring the USDJPY, the XAUUSD, the USOilSPOT, and of course the GBPUSD. And it has been quite a tiresome week, as you will notice that price action has been a little bit choppy, where price has not been really moving in the direction, though it has been moving, but the movement wasn't as significant as expected, as most of the time we will be taking out at break even or probably some stop loss, whichever the case it may be. And we all understand why this is happening, and this is as a result of the high impact event that we have been witnessing since the beginning of the week, the anticipation of this event. And even during the event, we have been seeing some indecisive movement in price action. But what we are going to be doing in this community is to ensure that we keep calm and stay in line with our trading plan so that we can be ahead of the market. So we'll still continue to go ahead to see how we can position ourselves ahead of both the London and the New York session today by reviewing the current market structure using technical parameters such as trend lines, key levels, and technical patterns to identify potential trading opportunities for today. And for those who are joining us for the first time, you are highly welcome on board. I really do appreciate that you are joining us for the first time. And what we simply do here is to come together as a community gathering in anticipation of both the New York and London trading session. So during this time, we will be reviewing and managing our current positions, while we also aim to position ourselves strategically ahead of both the London and the New York session today. So you are welcome on board. And the basis of this analysis is a follow-up detail to the videos I normally share during the course of the weekend. So it is important you watch these videos, as this will give you an idea and the background knowledge of where we are coming from. So we have some key levels we already identified on the chart, which we basically use to guide our trading activity on the 1 hour time frame. So you might be asking yourself, how did it get to this point? How did we get to the level of finding this kind of structures? Well, to answer that, you need to watch the videos. So I already have them in the description box of this current video you are watching, so you can check them out after the live session, and they are duly timestamped so you can easily navigate to whichever aspect of the video is of your interest. So once again, you are highly welcome on board. And for those who have been with us, glad to have you guys around. And please let me know in the comment section if there are any issues with the audio or the visuals, as this will help me to be able to do the necessary adjustment as we continue to analyze, and this will also make our experience a better one. And I'm also excited to let you know that yesterday we kickstarted the XAUUSD live trading platform, which I did yesterday, and I promise you that with time things will get better. So I just had to figure out ways and just give us something yesterday, which though is not of standard, but I promise you with time it will continue to get better. So thank you guys for the support, and just let me know in the comment section if things are working technically fine in terms of audio and the visuals. Please, I would really appreciate your feedbacks in that regard. So with that being said, let's dive right into the business. And as usual, you know how important we normally want to check the economic calendar, as it's very important for us in this community, as these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And by knowing the timing as well, we can easily position ourselves in such a way that we can catch any potential trading opportunity prior, within, or even after this event. So with that being said here, let's dive right into the economic calendar to see what we are going to be looking forward to for today. So let me zoom this in a little bit. And for today, we have something coming from the UK economic docket. In fact, we have a handful of them, but the most important one is the interest rate hike, where there is a general consensus that the Bank of England is likely going to be on the track of delivering its 13th straight rate hike today. And this is something that majority in the market will be looking forward to, and a rate hike today is likely going to be giving us some bullish traction, though we are not jumping into conclusions yet because we don't know how the market is going to be reacting to this. But from a psychological perspective, a rate hike today is likely going to be pushing price to the upside. But you know how we do it in this community. We always want to listen to the price action, as this is the basis upon which we normally make our decisions. So for today, Thursday, June 22, we have the first high impact event coming in from the UK economic docket, and this is going to be coming up in about 2 hours from now. So we want to be on standby for that one. So we have the Bank of England minutes, we have the Bank of England asset purchase facility, we have the interest rate decision. That is one key event we are looking forward to. Then we have the MPC vote rate cut, vote rate hike, and the vote rate unchanged. Then we also have the monetary policy summary. So all these events will be running simultaneously, and there is a chance that we could be having a very, very strong volatility in the market, and it's better that we position ourselves so that we are already in the market before this volatility happens, so that we can capture these moves as projected. Then later on today, from the US economic docket, remember yesterday we acknowledged the fact that the Fed chair is going to be having its testification before the US Congress yesterday, which already started. And in fact, we saw how Powell was playing the rate hike script, which I think the market is already in tune with that. And he was trying to favor the dollar in such a way that it could increase the volatility for the dollar. Though we saw some little traction in that regard, but after and towards the end of the session, we begin to see majority in the market going for the safe haven, that is the gold, to mitigate against any risk in that market. So we are also going to be looking at how the market will be anticipating its testification today, and how we are also going to be positioning ourselves in such a way that we can maximize the potentials of this on those instruments. So with that being said here, let's dive right into the business. And as usual, the first commodity we want to be taking this morning is going to be the USOilSPOT. So on the USOilSPOT, we finally witnessed the breakout of the $72 level. Remember how important the $72 level is for us in this community. At the beginning of the week, we were able to identify this key level, and since the beginning of the week, it has been a major determinant of price action. Now, if we look at the 1 hour time frame that we always do, you will see that since the beginning of the week, we saw, even since last week's trading session, we saw how the $72 level has been a strong selling niche in this market. So buyers have been trying to break through that structure since last week Friday, but failed at every attempt, as we saw selling pressure negating all attempt by the sellers to break through that structure at every point in time. We saw what happened here at the beginning of this week. Then we saw what happened here on Tuesday. That was on Tuesday, 2 days ago, before we finally saw the breakout of this structure yesterday during the Fed chairman's testification before the Congress. And at this point in time, we had a buy stop triggered at that point, and I told us all to move our stop losses, and at this point at break even. And since yesterday, we are yet to see price to take us out of our position, as we'll still have a buy position running with about how many pips in profit right now? About 43 pips in profit at this particular point in time. So well done to you guys for being on standby to catch this move and ensure that your stop losses are moved to lock in some profit. So the entry point is still where we want to place our stop losses at this point, as we need a breakout of another key level that I just identified this morning at the $72.70 level to give us a sign that the bullish momentum we're witnessing here will continue to climb to the upside. Then one other thing I would like to call our attention to here is what has been going on since Tuesday, that is in the last 48 hours. It has been quite obvious that price action has been bullish, finding higher lows, leading to the breakout of that $72 level. And to guide our trading activity for today, we want to definitely connect the series of higher lows here to give us a trend line that we are going to be using to guide our trading activity for today. And if we bring out our line chart at this point, connecting the series of higher lows, we should have something like this to work with for today. So once we draw this out, we'll do some adjustment if need be when we bring back our candle chart. Okay, so we do have some adjustments to make. So we have something like this to work with. And you know how important our trend line is for us in this community. So as long as price action remains above that trend line, we shall feel comfortable in our buy positions, while we also look out for more opportunities to maximize the potential of that move. And secondly, the trend line helps us to be able to place our stop loss at the most appropriate place. So most of the time, we want our stop loss to be right below the trend line so that we can give room for price action to breed. And from what we have here, going into the London and New York session today, we have another key level that we are going to be using to guide our trading activity today. So the first one here is the $72.70 level, which, as you can see, when price action got into that level during the later part of the New York session yesterday, we begin to see some selling pressure around that area, giving me a sign that sellers are around that point. So we want to see price action take out the sell positions around that area to give us a signal that this bullish momentum might likely get stronger for the second half of the week. So what I will be looking forward to at this juncture is a breakout retest. I want to scale down into my lower time frame as soon as the breakout of structure happens on this chart. Retest could happen at one point or even come to as far as the trend line before we start seeing buy pressure to incite another wave of bullish momentum. So we are still looking very bullish at this point, considering the fact that price action finally broke out of our key level for the week at the $72 level. So we look out for more opportunities above the $72.70 to maximize the potential of this move. And trust me, I will be with you in the comment section to give you updates on how we intend to take advantage of that opportunity. Then, in as much as we're looking out for buy positions here, we cannot ignore the potentials of sellers. And one thing about the breakout of the $72 area here yesterday, it could still turn out to be a false breakout at this point, where the appearance of selling pressure here, if it persists, then we might likely see a reversal pattern where a structure like, let's say, a double top structure could incite a reversal pattern that could lead back into price action, trading below the seller's territory, below the $72 level, to incite a sell-off in this market. And in fact, if price action ever breaks down the $72 level again, at this point in time, it would have broken down that bullish trend line we just identified today. So you can see how this new trend line we identified is going to be a major determinant of price action today. It will help us to guide our bullish momentum, and at the same time it will help us to know if this bullish momentum has been negated, has a breakdown retest, will definitely confirm an opportunity for us to sell the US oil for today. So we shall be on standby for this one, and let's see how the market will play out in the next couple of hours. And trust me, I will be with you in the comment section to give you updates as at when due. So these are my views here on the US oil spot today. So you might want to mark these levels out on your chart, and as well you might screenshot the chart so that you can use it as a reference point to guide your trading activity for today. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next option. So if you have any questions, feel free to let me know in the comment section. So I will be taking some time to wait and see if there are any questions before I move on to the next instrument. Okay, so in the absence of no questions, I want to assume that we're on the same page here. And just while waiting for questions, I saw this current candle running. Please don't let us get too excited about it. Let's hold on. Let's wait for that candle to run through. If it's going to break down the $72 level, remember we are going to be scaling down into our lower time frame to look out for signs that sellers are gradually gaining momentum back again, and this would of course reflect on the chart as a retest of this level for us to be now able to join a bearish move to the downside. So let's keep that in mind while we continue to monitor price action. So with that being said here, and with the absence of no questions, so I want to assume that we are on the same page. So I will be moving on to the next instrument. So the next instrument on our watch list for the week is the GBPUSD. Now on the GBPUSD, we have been selling, actually we have been more of selling the GBPUSD since the beginning of the week. And remember, we had our key level had the 1.28500 area, as you can see here, and since the beginning of the week we haven't seen anywhere where price action broke out of that level. Majorly, most of the time price has been trading below that key level, and in addition to that key level, at the beginning of the week we acknowledge a simple flat channel where price action was caught within a range between the 1.28375 and the 1.28100 level to give us a flat channel to work with. And you know how we do it whenever we identify this kind of simple flat channels. We want to remain patient, waiting for key structures to break out before we want to be joining any bearish momentum. And our signals are always in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And if you look at the structure closely, with our sell stop order below the 1.28100 level, we saw the breakdown, and in fact the market gave us an opportunity as it retested it a couple of times before pushing price action to the downside. And in fact we had we added more positions at that point, and since then price action has moved over 100 pips to the downside. And one other thing about this structure is how the trend line, that is the descending trend line you see on your screen, has been a major determinant of selling pressure in this market. As you can see, after connecting the series of lower highs, we have a trend line which has consistently been respected by price action since the beginning of the week. However, something interesting has been happening since the first German speech, and at the same time, remember, we are anticipating the interest rate decision from the Bank of England today, which is likely going to be bringing some volatility in the market. And one thing we want to be doing here is to ensure that we position ourselves in such a way that we can catch that move when it finally happens. Now, there is one thing I've observed here this morning while trying to sniff out what could likely be happening today. Now, one thing I saw here is that the 1.2700 level, a very strong psychological area, negated selling pressure yesterday. As you will see here, yesterday morning we saw buy pressure resume around that area, bringing price back into that trend line. Now, since price got into that trend line, it spent quite a while around that area. It wasn't a sharp rejection to push price to the downside, but instead you will see that it spent over 12 hours around that area, which is a sign that buyers are trying to knock through that ceiling. And you know, when the knock continues and persists over a long period of time, the weaker that trend line becomes, and finally at one point that trend line might be broken to the upside. And if the trend line breaks out to the upside, then at this point we want to be considering buying the GBPUSD, especially following a higher low here. Look at the lowest point for this week is at the 1.2700 level, and then the next low at this point, based on what we are seeing on the chart right now, is around the 1.274. And if this higher low persists and we don't see anything lower than this, a breakout of that trend line will definitely be giving us a signal to get ready to buy. But before we jump into conclusions here, I want us to have an holistic perspective into what is really going on here. So as a result of this, I want us to scale up into the higher time frame. Let's see things from a bird's eye view, and then we go back into the lower time frame to make our decision for today. So here we are on the 4 hours time frame, and this was what I was able to project in my video this weekend. And one obvious thing about this current structure is the fact that the pound sterling has been on a very strong bullish momentum in the last 4 to 5 weeks now, and in fact we have a couple of ascending channels to emphasize the momentum of the buyers in this market. So I have the first ascending channel here after connecting the series of higher highs and higher lows here before we started seeing a deviation from that ascending channel. As you can see here, we started having new higher lows leading into the breakout of that ascending channel to give us a new ascending channel here, which further emphasized the hopes for the GBPUSD. And there is a general consensus that the Bank of England is likely going to be increasing the interest rate, and you know what that does to the pound sterling. Of course, it's going to allow bullish traction in that market, as a lot of people will want to be invested in the pounds. And for me, I think this projection had been seen for a long time before this present moment, and this has been why we have been seeing this strong bullish traction in the last couple of weeks. Now, if we zoom into the current structure, which we identified at the beginning of the week and even in my video, you will see that price action has been within a range here since the second half of this month. We saw between the 1.285 and the 1.270 level. And one thing you will notice here is that after price action tested the highest point for the year, I think 1.285, it appears that price went through a retracement of that impulsive move into the 1.2700 level, and the inability of sellers to break through the structure, for me, is a very beautiful sign that we might likely be going bullish. Then in addition to that one, remember this ascending channel, the resistant line of this ascending channel we identified earlier. You will see after price broke out of that structure here, I think last week's trading session we saw the breakout of structure, and from a technical standpoint, when price action breaks out of a structure, we expect that one point in time it will come back and retest that level to incite another wave of bullish momentum. And if you look at the structure closely, following the breakout of that area, price action appeared to have come back to retest that level during the trading session yesterday, and since then we have been seeing buy pressure. So I'm of the opinion that if this persists, we are likely going to be seeing a bullish momentum today, a very strong one if you would ask me. So now the next question here is, how do we intend to position ourselves to capture this move? Now, if that is going to be the case today, so we want to scale down into our lower time frame after digesting the information here on the 4 hours time frame. So if we scale down into the 1 hour time frame, this is what I'm able to come up with here. Now let's zoom in. I know you can see it here, so I'll just bring it right into the center of the screen. Okay, so there is one thing that you will observe here around this area. Now, since the impulsive moves at the beginning of the week bringing price into this area, I'm beginning to see something that looks like a reversal pattern in the form of a head and shoulder pattern, though it's not really a head and shoulder per se, but it looks like it, where we have this left shoulder, then we have the head, then we are beginning to see the formation of the right shoulder at this point. And one thing about my head and shoulder patterns is that I want my right shoulder to be like a higher low when it comes to an inverse head and shoulder pattern compared to my left shoulder, as you can see here. So there is a higher low there giving us a tilt in balance in favor of the buyers at this particular point in time. So with this reversal pattern we have here, you know what we do next whenever we identify price action potentially evolving into a reversal pattern. The next thing we want to be doing is to identify a neckline that we are going to be using to guide our trading activity, as a breakout of the trend of the neckline at this point will, one, validate the reversal pattern, and secondly, give us an idea into the potency of that reversal pattern. So what we are going to be doing now is to identify the neckline, and the neckline falls exactly around the 1.27850 and the 1.2770 level. And at this point in time, this is going to be where we are going to be looking out for buying opportunity. So a breakout of the structure, hold on a second, a breakout of this zone, retest at any point in time will be what we are looking forward to buy the GBP USD today. And there's one more interesting thing about the breakout of this neckline. You will see that the descending channel the descending trend line we identified since the beginning of the week would also have been broken to the upside. And when price breaks out of a trend line, you know this is a sign that the trend line may no longer have the capacity to negate the bullish attempt anymore. So at this point, we are at a very critical confluence where the trend line and the potential neckline of this reversal pattern is sharing a confluence. So we're going to remain patient at this juncture to wait for this structure to mature before joining any bullish move at this point. Well, because of the likelihood of a volatile movement in price action today, I'm of the opinion that we should have a buy stop order above the 1.27850 just to risk it, because if the bullish momentum begins, we might likely not see the opportunity to join anymore, because we might not see a retest of structure happen when the bullish momentum begins. And the event is coming up in about an hour 15 minutes from now, so we really want to see, and if we are lucky enough, we already have a breakout retest before the event happens, then well, good for us to be able to be part of that move. But if this does not happen, let's have a buy stop order above the 1.27850, and if price breaks out, then comes back to retest the structure with continued buy pressure, then we could be thinking of adding more position to our existing trade here on the GBPUSD. So let's see how price action plays out around this zone here to determine what our next line of action will be. Now, in as much as we're looking out for buying opportunity here, you know how we do it in this community. We don't want to ignore the potentials that sellers could still come in at any point. Now, remember, we have a descending trend line which has been guiding this bearish momentum since the beginning of the week. It could still be a level that can hold on to and negate buy pressure too as well. So if that is going to be the case, we don't want to miss out on that opportunity if a bearish momentum will come in at this juncture in the market. So how do we intend to position ourselves to join a bearish momentum here? Well, if you ask me from a long-term perspective, from a strategic point of view, I would rather want to see price action take out the 1.2700 level, which has been an area that has been negating the seller's attempt since the beginning of this week. Now, I would rather want to see price action break through that structure for me to start looking out for selling opportunities in this market. So something like this, price drops through, break through that structure, takes out the buy positions, and we want to look out for liquidity, which would reflect on the chart as a retest of structure to incite another wave of bearish momentum to the downside. Now, you might want to ask me, how can we maximize that move even before the breakdown of this level happens? Well, the last higher low we have here is around the 1.27400 level. So if there is a high chance that price action will break through the 1.2700 level, then definitely we are likely going to be seeing something like a breakdown, retest of structure, continued lower highs and lower lows to slice through this area. So if we want to maximize the bearish move here, then we want to join even before the breakdown of the 1.2700 level happens. Now, how do we do that? How do we get to join that if that will happen? Well, the first thing I would like to do here is to mark out the 1.27400 level here, which you can see. So let's mark this level out. I would like to give it a different color to emphasize its importance at this point. So let's label it for the sake of clarity. So you want to mark this level out on your chart. It's a very strong psychological level considering the round figure of that price. And then I want to have, let me give this a darker color so that we can see things clearly at this point. Then I want to see price action break down, retest it for me to consider selling at this particular point in time. So if that is going to be the case, then there is a high chance that we could have a breakthrough of the 1.2700 level. So let's mark this level out on our chart and look out for opportunities here. So this is what will make us to sell the GBPUSD today. So that is my view here on the GBPUSD. So we want to mark these levels out on our chart and use it as a reference point when we are about to make our independent decision for today. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next instrument. I want to confirm that I noticed that the video was lagging, so I had to do some adjustments. I want to confirm if things are going on fine right now. Can you see the screen? Is the visuals moving seamlessly or not, so that I can go back to do some adjustment here? So let's see. I will just take some 20 seconds to 30 seconds to see how things are running at this point before I see if I can continue, or probably do some other adjustments, or if possible, switch my router. So I'll take some 30 seconds to see how this works, and then I think things are fine now, I guess. Please let me know in the comment section if it's quite okay now, so that I can continue. Okay. All right. Thank you very much, Ayodeji. Thank you. I really appreciate that. All right. So let's just continue with where we stopped. So I will be taking in the XAUUSD again. So on the XAUUSD, like I was saying earlier, we had a simple setup we identified on the 30 minutes time frame to guide our trading activity. And one of the things I mentioned here yesterday was this potential demand zone, which was situated at the 1,930 level, as you can see. And based on the rejection of that demand zone by the sellers yesterday, I said we might likely be seeing price action transition into what might be a reversal pattern in the form of a double bottom structure. And the appearance of another higher low here was more of a sign that we could see price action continue to the upside. And one thing I said here yesterday is that if we are going to be buying, then we want to see the neckline of this double bottom structure broken to the upside, where we said the breakout of this trend line will give us a sign to be able to maximize that move even before the breakout of the neckline happens. But as you can see here, that never happened, as the sell positions we had yesterday. Remember, we had a sell position, and I told you that we want to be moving all stop losses to somewhere right above the 1,938 level to give room for price action to breathe. And you see what happened here. Price did not even get close to the stop loss at all, as price action went on to continue to the downside, breaking down that demand zone further to inside the potentials that sellers are still very, very strong in this market. And at the point I was sharing my live session, my XAUUSD live monitoring on YouTube, we acknowledged a sell position here yesterday, and this was during the Fed Chairman's Powell speech, and we had price action moved over how many pips? Over 100 pips in that direction. I told us all to move stop loss to entry point. We had some volatility. Price action took us out of the sell positions, and at that point we begin to see a new shift in the market. And one of the things I saw that made us to change the idea from selling was the continued buy pressure we noticed between the 1,926 and the 1,931. And if you look at that structure closely, you will see how we've been witnessing sharp rejection. Look at the nature of those wick. It was a sharp rejection of that area, giving us signs that buyers are around that area and that the market is not buying into the rate hike script played by Powell at that point during the event. And because of the situation here, we were in a little bit of a choppy situation. We had a buy position triggered here, and before I closed the live monitoring platform, I told us all that we are going to be securing the position, and let's see how this is going to play out. But what you saw here, price dropped back to the downside. So we really have not been on a very profitable side, and this morning we were taken out of that position at a loss. So at this point, we still need to be very, very careful in this market, as anything could still happen at this particular point in time. Now, taking into consideration the current market structure here, there is a new level at the 1,926, which has been a strong buy niche, at least since yesterday when Powell was speaking. And I'm of the opinion that let's see how price action will be reacting to this level to determine what our next line of action will be. Now, if buy pressure continues above this area, then there is a high chance that price could still go to the upside. So what I'm going to be doing, if the rejection of the 1,926 persists, I want to be looking out for buying opportunities above the 1,931 level. And how do we intend to take advantage of that opportunity when price action gets to that point? Are we going to be having a buy stop order, or are we going to be waiting for some confirmations to happen? If you would ask me, I would say here that we should wait for confirmations to happen around the 1,931 level. And the simple reason is simply because of the strong bearish momentum we have been witnessing in this market since the beginning of this week. And coupled with that one is this trend line that we have here, which has been pushing price to the downside. Buyers are still yet to find that momentum to break through that trend line. So for me here, if I want to buy at this point, I would rather see a breakout of structure happen first of all, then take a deep breath and wait for price action to come back, retest that structure with continued buy pressure above this level on my lower time frame will give me that opportunity to join a bullish momentum. And in fact, we have key levels here that will help us to maximize the potential of this bullish move. So we have one at the 1,936. We also have one at the 1,938. So we want to mark these levels out just in case price action continues to find higher highs in this market. So that is how I'm going to be buying the XAUUSD from this current market structure. Now, thinking of selling, like I said earlier, I want to see price break through the 1,926 retest of that structure before I could start considering selling the XAUUSD at this point. So let's mark these levels out on our chart and let's see how things plays out in the next couple of hours. And trust me, I'm always with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due. And remember, the XAUUSD live monitoring platform will come on live at the 30 minutes before the New York session begins. Okay, sorry about that. I just lost my sound there, so I had to wait for it to come up. So like I was saying earlier, so the XAUUSD live trading live monitoring platform will come up live on my YouTube channel 30 minutes before the New York session. So I will be sending the link as soon as it comes up on my TradingView on my Telegram platform. So and you also get a notification if you subscribe to my channel. So if you subscribe to my channel, you will definitely get a notification that we are going live for the monitoring of the XAUUSD. So that is that on the XAUUSD. If you have any questions, feel free to let me know in the comment section. Thank you very much, GOEFX. Thank you for your feedbacks. I really do appreciate it. So with that being said here, I'm going to be moving into the last instrument for today, which is the USDJPY. So on the USDJPY, we have had a very, a little bit complicated situation here since the beginning of the week, as you will see from an holistic point of view on the 1 hour time frame here. Price still keeps on ranging between that zone we identified at the beginning of the week. Now this is the level. We have the 142.00 level and then the 141.500 area. In fact, I had a couple of losses here during the week. I had one around here after taking the buy stop order above that resistant line, though we had the privilege of recouping the loss when price broke through the 141.750 to the downside. Then we saw another one around this area. I think I had another loss here around that loss around this area before this one closed at break even at this point. So it has been more of a consolidation phase actually, and it just shows us how participants in this market are looking forward to what the Fed chairman is going to be speaking and what his economic outlook is going to be like. But from what we can get so far, from what he has said yesterday, there is still a likelihood that there will be some more rate hike coming up again next month. I think the next interest rate decision is coming on July 25th or 26th. I think it's between July 25th or 25th, 26th or 27th of next month. And since it said that there's likely going to be a rate hike, the market might likely push to the upside on this one. So we're still looking at what is going on here. The market is still taking some time to digest the information gotten from yesterday. But if we are going to be looking at things from a technical standpoint here, I'm of the opinion that price action is still looking very bullish on the USDJPY. And one of the reasons why I have said this is this. Now, if you look at the resistant line of the flash of this channel here, of this consolidation phase, compared to the support line of this consolidation phase here, you will see that we have been seeing more of the breakout of the resistant line. We had one here, we had another one here, then we had another one on Wednesday. That was yesterday. I think we had couples. We had a couple yesterday. We had two here yesterday, and you can see we have been seeing higher lows in this market, giving us clues that buyers are still trying as much as possible to break through that structure. And for me, I'm of the opinion that the more the knocking of the ceiling, that resistance level happens, the weaker it becomes, and which would lead to a final breakthrough of that area, and which might be very, very significant at this point. And in addition to these structures we identified here is the higher lows that you can see here, giving us a trend line to work with for today. So as long as price action remains above this trend line, we obviously want to continue to look out for buying opportunities in this market. So I still have my buy stop order above the 142.00 level to capitalize on that move if price action moves to the upside, with a stop loss sitting just right below the trend line, dovetailing to about 30 to 35 pips stop loss on that one. So let's see how this is going to play out today. I understand it could be a little bit tiring, considering the fact that we really have not yet seen a huge traction in this market. Sometimes this is how the market works, especially when we have major events, when we have weeks filled with major events like this. So let's remain patient and watch out for these structures to mature. So I still hope that price will still go to the upside. So I'm of the opinion that we could still have a bullish momentum in this market. Now, talking about selling the USDJPY, I would rather see price action break through the 141.500, which happens to be the support line for the week, before I will start considering selling the USDJPY for the week. But we could still see an opportunity to sell even before the breakdown of that structure happen, which I will obviously give you updates on my TradingView and Telegram platform, as if we see a breakdown of this trend line coupled with continued selling pressure below the structure, we could sell even before the 141.500 happens. But trust me, I will give you updates as at when due on both my TradingView and Telegram platform. So on this note, I think this is the last instrument for today. If you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions, and if there are not, then we just close for today and see in the comment sections of the XAUUSD live trading platform, and of course both my public platforms too as well. So let's see, any questions? So in the absence of no questions, well, I want to call it a day here. Thank you for watching, and if you found the video, this content helpful, kindly support the project by giving it a thumbs up. Your likes are valuable and it helps the video to reach much more traders who could also find this material beneficial to them as well. So please give it a thumbs up. I appreciate the project, and I look forward to seeing you right in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.